at what point do you approach investors, and when do you know, is it an idea that's worth investing in? From the entrepreneur standpoint, I guess.
It's a great question. It's really how you want to. You really have to think about how you want to run the business, and what's really important to you. I think, we haven't raised money. So it's something that not that we haven't gone through the process of raising money. We're well versed at that. But we've kind of walked to the edge, looked over a few times and said, no, it doesn't look great. Because a lot of times you get that term sheet and the first line is like, we're going to give you X amount of dollars. And then like everything else, there's usually like 14 pages where like everything else is bad for you, and like you have to be okay. And like, it should be bad for you. I mean, people are giving you money. They need to be protected and everything else. So I think for us, what we hate to see is young entrepreneurs who haven't done it before coming out of the chutes saying, I have this great idea. I'm starting a business, but what they're actually doing is creating a PowerPoint and spending 6 months trying to raise money and then giving up. I would encourage, especially if you think about, if you're a young entrepreneur and you haven't had a job, you haven't been in an industry, you haven't worked for a startup company, and you don't have the requisite skills to build the product yourself from the beginning, I would recommend that you spend some time trying to figure out how you can do it very cheaply without having to raise money. Because if you think about it from an investor standpoint, to invest in that profile, you're going to have so much equity in the business for not that much money to validate your risk. So I would say, like, if you've been in a business or you've been in a startup and you have industry expertise and you really you really know what you're doing, and then I think it makes a little bit more sense to go out and raise money from the beginning. But if you're coming out of Tulane and you have a good idea, I think I would look for more creative ways to get that first $10,000 or $15,000. That'll help you get that first version and get some proof points going. Right. And once you have proof points, you can go sit down with an investor and say, look, I've got 10,000 users. And, one of our advisors always would say, you can prove the dogs are eating the dog food. Well, then you can raise money and you're in a little bit of a better position to do so. But if you have no experience and out of the gate, you're trying to raise money with no proof points of success, that's a really tough pill to swallow. And you're probably going to end up, if it is a great idea, giving it so much equity at the beginning that you could have avoided if you just got a little bit further along.
Right. Interesting.
Raising money, I think too often in startup communities, because startups are hard, raising money is seen as success. I raise money, woo, let's go get drinks, and, and it is success. It is validating. I'm not trying to say it's not validating, but taking other people's money is definitely not success. At the end of the day, it's not success. Success is creating, recurring or creating a business that grows at a big clip and producing value for the shareholders and the equity owners. So It is a cool thing, but it's definitely not the goal.